conclude. So, recording in progress. Yes. So, giving specific guidelines as to how you answer the question. That's what I said. So, the A says evaluate whether the senior auditor's report is appropriate. And I indicated that for the first one on Toy and Co., his opinion was appropriate. But the fact that he said it should be put in the emphasis of matter paragraph, that one is wrong. And you can use the standards to support your argument. I think the standard there is ISA 560. Events, I think it's subsequent event or something. You may have to check. But in accounting, that is events after reporting period or whatever. So when those events happen and you are presenting it in the financial statement, you only disclose it. You don't put it on the face of the financial statement. Okay, so what the auditor was suggesting that it should be put on the emphasis of matter paragraph is wrong. The emphasis of paragraph matter is used when the issue is very material to the financial statement. So if it's not supposed to be on financial statement, there's no business presenting it on the emphasis of matter. But for the factory and co, the opinion he gave is not appropriate because, whatever happened was material, okay, and should have been disclosed on the financial statement. Okay, I think the standards you can use the IAS, non-current assets held for sale or discontinued operations, blah blah. Those standards are there. I think they are in the solution. So, but I'm seeking to just help us understand the whole scenario. Now, the B was asking that we look at the meaning of emphasis of matter paragraph and other matter paragraph. I think I've made that point. Emphasis of matter paragraph, we use that paragraph if the issue is material on the financial statement. Other matter paragraph, you discuss issues that are not on the face of the financial statement, but may affect the judgment of users of the information. Okay. So I think I'm done. So, Sir Sami, I think you take on question 4 as we discussed. You see, Sami, question 4. Over to you.
Okay, so the question 4. Okay, you said you shouldn't read everything. The question 4 has the issue of we've already introduced ourselves towards emphasis of matter paragraphs, but when it comes to public sector, I don't know if you treated this in class. This question is asking of additional issues when it comes to public sector. That's what the A part is asking about. So, what additional guidance for public sector auditors relates to emphasis of paragraphs in the auditor's report? When audits are carried out for public sector entities, what additional issues should come? And it makes sense that additional issues should come because this is public funds we are talking about. So if that much scrutiny and that much is expected when it comes to even the private companies, how much more the public sector companies? So straight away to the answers. You audit mandates reporting during matter paragraph. There's a fund that really happen in the private sector or the budget. So when legislature does the bills or the act, the bills must be passed into acts that will mandate the budget to be implemented. So issues about those legislative actions will also be put in place. Then contradict regulations or directive with a significant effect on the entity. So sometimes the budget can say one thing. Maybe during the year, a policy is passed into an act, that's the Appropriation Act, and what's the other one? The Appropriation Act and something act. I think Finance Act. So when they are passed into act, now become laws. But if during the year, any other contradictory policy or directive comes, which maybe would affect the entity, the performance of certain things that they were supposed to do in the budget, it should come in the emphasis of matter. Then issues of fraud, abuse, or losses, significant transactions, significant internal control deficiencies. Significant internal control deficiencies should also come in the when it comes to the public sector emphasis of matter paragraph. Then questionable business practices. Bear in mind this public funds. And so if there's anything questionable, anything that raises some doubts when it comes to public trust, it should also be over there. Transactions entered into without due regard for the economy. Grab period wastage, the environmental issue, corporate social responsibility issue. Remember, when a public sector entity already they're supposed to be serving the public, where they decide to now, though they are performing their mandates in serving the public, they now go an extra mile to do corporate social responsibility that is outside their scope. It's something worth witnessing, whether indeed it is just for the public or it is a conduit for some, how do I call it, conduit for some misappropriation. Then ineffective and uneconomical use of
So,
public assets. So
yes, I
that's
mean,
it.
sorry to cut you.
Yeah.
So it
Okay.
means that it is still emphasizing the concept that emphasis of matter paragraph is that paragraph where you speak about the very significant issues, right?
Yes.
Okay, thank you.
Yes. Just that it is broadening the scope of what is significant when it comes to public sector, since it has to do with public money.
Okay, so in this case, when you are answering the question, you have to make reference to public sector transactions and events that are significant.
Yes.
Okay.
If you remember anything, at least pass your mind to things that have to do with public money. For example, some things that should be easy to remember are fraud, abuse or losses, questionable transactions, let's say legislative actions. At least these three should be easy to remember.
Okay.
And then some others, ethical issues and all that. Yeah. Then the B part. So that's it for the A part. Is there any question before we look at the B part?
I am okay.
Okay. So for the B part, if you look at the requirements, we have two requirements. One is the principle of performance audit, and then for documentary evidence useful at the planning stage during an audit exercise. So the question gives a preamble about performance audit, and then goes on to give the requirement, the principle of performance audit. Now the three is that's to it: economy, efficiency, and effectiveness. That's what is applied over here. For this one is transfer of learning, what we know from, I think we did this in public sector. Economy, efficiency, and effectiveness. When we talk of economy has to do with cost. So the cost used to carry out the audit shouldn't be more than the benefits that will be obtained from the audit. So if you look at what will be received from the audit or the benefits that the organization stands to gain in engaging in the audit exercise, just suppose how much it will cost them. It shouldn't be something that the cost will be more than the cost they will incur to do the audit will be more than how much they'll receive. They should find, I don't know how to quantify the benefit, but the benefits are not necessarily monetary, but anyway, you can quantify it, you can forecast it that once you have an audit report, it can attract investors because investors seeing that you do audits and all those things. Those are good signs of a good company. So such benefits should be weighed against how much it will cost to engage in the audit to see whether it is economically prudent. Then we have efficiency. So in conducting the audit, So with economy, since you are trying to minimize cost, you first of all compare how much it will cost you to enter the audit against how much you benefit from the audit. And in performing the audit, you find ways to minimize cost, but not at the expense of a quality audit. Then for the efficiency, you are trying to get the best out of the available resources, the best out of the available resources. So maybe um, the audit firm that you're able to afford for them to come and audit the company, you're able to get the best out of whatever they have. If maybe they have a certain technology, they have whatever resource they have available, and the money that is available allocated for the audit. You should get the best out of the money. If maybe just around the same amount, you can get a higher rated audit firm to do the audit. It's efficient that to do so. So efficiency has to do with getting the most from the available resources. So the resources that's available for the audit, you should get the optimal use. It's just like, let me give the example of a phone. You can have a phone, but you may not be using or you may not be deriving all the benefits you can derive from the phone. The same way, if you have resources for an audit, all the resources available for the audit, if you use it to its optimal, where you are getting the best, nothing is going waste. That's efficiency. Then effectiveness has to do with doing the right thing, doing the right. So in entering an audit, there are certain targets, there are certain purposes of of conducting an audit. Now, in conducting the audit, effectiveness is saying that at the end of the audit, are you able to achieve those are you able to achieve those objectives that have been set? That has to do with the effectiveness of the audit. So these three are the principles. These three are the principles of the audit. I don't know if there are any questions.
Okay, I think it's straightforward. Economy, efficiency, and
Any questions, please?
yeah,
Okay.
economy, efficiency, and
Effectiveness.
effectiveness. Okay, thank you.
Effectiveness. Yes, those are the principles. Okay. Then the I has to do with information to be documented in performance audit for enhancement of audit work. So has to do with keeping records. So some of the records that should be kept, first of all, the auditor is supposed to do a background check of the client is about to audit to know whether to have certain background information, maybe about the industry or the sector, their nature of business. The auditor should have this knowledge so that in auditing, as he meets certain terms, certain transactions, you understand what they are about. Because every industry, every sector, every business, and what constitutes their revenue, what constitutes their expenditure, what constitutes their accounting things. So when he or she does this background check, there should be records of their background. So background knowledge and information of the entity should be there. Then after gaining this knowledge, the auditor now proceeds to have the audit objectives and audit sub objectives. So after gaining an understanding of the industry, you will now have an understanding of which areas may be risk areas, which areas may pose more risk and less risk. And then based on that, you now formulate the objectives, and also based on the audit engagement. The audit objectives should also be written down so they are guided by the objectives. Then the scope of the audit, maybe the financial year that is being audited, the area of the business that the branches that are being audited. That's the scope. The scope of the audit should also be written down. It guides the work. Then audit criteria. That's what things merit to be added as evidence. What things merit to be considered as material. All these criteria should be written down so that it's not as and when they face transactions before they'll be contemplated whether it's material or whether it is something that's relevant to the audit or whether it is a relevant evidence. So all these, what constitutes good evidence, appropriate sufficient evidence should be put down. What constitutes materiality should also be put down. So they'll be guided by that. Then the audit methodology, that's how they are going to carry out the audit should also be pushed down, the audit methodology. So from gathering the evidence, going to the evidence, to forming a conclusion. All those methodologies should activity plan covering staff requirements and expertise. So now that the methodology has been put in place and documented, each staff, depending on their skill, depending on their experience, there should be a plan on what each staff is doing, Then the estimated cost of the audit should be documented for future reference. Then key time frames, milestones, and control points. So maybe the audit methodology will be put down, the plan will be put down. Maybe the audit is supposed to cover 1 month. Within 1 week, what should be done? Within 2 weeks, what should be done? Within 3 weeks, what should be done? And as they're achieving it, all that should be documented. So